Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, October 31st, 2019. As we wrap up the last trading day of the month here, let's take a look at the charts. And to recap what happened today, let's jump back and start out with the charts I posted this morning. These were taken, screenshots were taken and posted about an hour before the market opened, 8:30. a.m. So what I've highlighted here, and we'll get to what happened today in a second here, is we have ES. I had what I call a benefit of the doubt trend line. I have two trend lines on this bearish rising wedge pattern right here, 60-minute chart. There's a rising wedge. Benefit of the doubt when I have two trend lines I can draw in close proximity. Give the second of the two the benefit of the doubt. You don't want to jump the gun on the breakdown of the first one. You want to wait for the second. And then even take it a step further. The real BOD level here, as I said, is the about 30.22, 30.20-ish support right here. You can see nice support right there because it comes back here and you capture all these previous highs. This is where the S&P 500 recently broke out to a new all-time high once it took out that level. And so that you have, if and when we fail that level, you're going to have a failed breakout there. Plus, so you're going to have a fall back down below what was resistance and now is a pretty significant support, as well as a breakdown of the bearish rising wedge pattern. So again, you want to give it the benefit of the doubt. Since you have multiple support levels in close proximity, the trend is bullish. You don't jump the gun on the first breakdown. You wait for the lowest of those levels to go. And as importantly, I also posted NQ this morning. You want to see NQ breakdown. So this is the 60-minute chart. Oops, hit the pause button there. On NQ, and you have same story here. You're wedging up right here. This point here, you have clean negative divergence right there, confirmed as well with the turn down. And so what I said there is you need to break both the trend line, the uptrend line, which did go, as well as I have two lines here I've been drawing. This chart didn't have it, the other version I did, and I updated. You have two lines there. There's a gap. If you zoom in right here, I'll get to that in a second. That's Sunday night's gap. Futures close on Friday and they open again Sunday night, and so that's been a big level, and it runs down to 80.40. So that is the sell signal I'm waiting on. We came close today, but we didn't get it, and we're going to have a jog down, I believe, to at least this level here, 79.78 when it comes. I think it's coming soon, but like I always say, support is support until unless broken. So those were the charts this morning. Let's look at the updated charts and see what happened today. And then not a whole lot happened because we closed virtually flat. We were down in the S&P 500, and we were down almost the entire day. Some very funky shenanigans in the last couple minutes of trading today. Big rip up in NQ to turn that index negative, to turn the NASDAQ 100, which had traded negative almost the entire day, only went green briefly, got faded at the open. We were open positive, and then again, red most of the day and closed up slightly. We closed basically flat, 0.03%. Somebody wanted to see the Qs close green for the month. But again, what happened technically, here's that bearish rising wedge I started with on ES, and you can see there's that support level right around 30.20, 30.22 right here, and it's acted as support and resistance, and we fell right down to it. And you can see each and every 60-minute candle today, all those that tested it, we managed to close right back above it. There it is. So you have these intra-period breaks. That's not a breakdown. You want to see a 60-minute candlestick close if you're trading or using a 60-minute chart. And most importantly, doesn't matter what ES does or NQ, you need both of those to break, because some traders trade one, some trade the other. I usually prefer NQ because you get more bang for your buck if you get the call right on where the market's going. NQ will usually go up, rally more than ES, or drop more. So looking at the updated chart here on NQ, you can see just a nice price action today. We came right down in between there. The support zone runs from 80.50 down to 80.40. So I said earlier today we need a break at 80.40, and we didn't do that. I can't recall if I've modified this trend line since that post this morning, but what hasn't changed is the 80.40 level. That's the level it needs to go, and you can see pretty clean reactions here on this trend line so far. So whereas the other day we didn't have really a cleanup trend line. We're starting to form one today. Now you have, cluster reactions. It starts down here. You have 2 reactions right here recently, and several more reactions today. I mean, look at all these candles right on there. Each and every one. They're all 60-minute candles. You can see these candlestick shadows, or the tails, the skinny part down below, break, and each and every body, 1, 2, 3, 4 bodies in a row, close right back on or above that trend line. And again, the big level is going to be, since it's just below, is that 80-40. Here's that gap I told you about, Sunday night's gap. That's why I'm watching that level. So, got the gap right there, and we've been dancing on either the top of the gap or the bottom, and so that's why we need to see 80-40 go. And the reason I think it will most likely go soon, whether we have another marginal new high or not, flip a coin as to whether that'll happen. We're so close, it wouldn't be much of an increase. We'd only need to go about another 0.6% to get to that previous high right there. So whether we get it or not, watch for a reversal and a break of the trend line, and then of course that 80-40 level. And so again, it's a combination of a lot of things, but including and not limited to the fact we have the most recent high was a divergent high there. We recently, remember, I pointed out that extreme overbought condition on the RSI 9 recently when it hit that 85 level. That seems to be the magic number. And as I told you back then in recent videos, I said quite often we come and we hit that extreme level, the 85 level, and then we come in, we make a marginal new high, and from there quite often that marginal new high after the that 85 level is hit right here, you did it here, you did it here, and that gives you negative divergence. You go on, that marginal new high is a lower high in the indicator, so you get the negative divergence. And so, as I said, sometimes it's one and done, but the majority of instances here, when you hit that extreme 85 level on the RSI 9 60-minute chart of NQ, you went on from there, put in a divergent high, making lower lows on the RSI and PPO, then the correction came. And so that's so far what we have right now. We hit that 85 level. We did get a pullback as expected the other day, pushed up, made a slightly higher high, meaning a marginal new high, and here we are. So to me, it's a matter of, we could certainly extend it. Right here you can see we had, after the tag 85, we had one and then a second, 2 slightly higher highs, with the indicators making lower highs. And so here, that we have enough right there, I think, to break down, or like I said, maybe 50-50 odds whether we go up here, slightly higher high, but the end result's the same. Anything much more than that, we burn through the divergences, and I'm wrong, but I think it'll do that. And so like I made a post in the trading room today that and this is active trading stuff. Where is it? Right here. Shortly before the close, I made a micro call. This is a 1-minute chart of the ES and NQ futures. So when you zoom in today, what you're looking at is just today's price action. Remember, I told you it was about 30.20 in ES. And that's that level we hit. 30.22 was where the level is at. We had a little spike below right there to 30.20, but there's the 30.22 level. Perfect tags of that level all day. And then I told you it was 80. The zone runs from 80.50 to 80.40, the support zone on NQ, and so you can see we held above that. And what happened is we were compressing, we were bouncing off the support all day, but each time we were making lower highs. And then at the end of the day, I said, look, they're probably going to, it's a micro call, they're probably going to pop that level. And so you can game it, if you're day trading in ES or NQ, you can run it long and then reverse here. And that's what I did. So I ran it up long, reversed. And as I said, I made clear, I only did a partial position because I planned to add either on a more upside, and my targets are to be determined, but it'll probably be, should we make that marginal new high tomorrow, or on a break below those levels, again, 80.40. And again, this is swing trade stuff. I know right here was day trade stuff. It was posted in the trading room as a day trade op because I expected that level to go. Let's take a look at what happened since then. Well, here was the breakout on the next chart I posted. We did break out. This is where I reversed, and then let's show you what happened since. Right down here. I had to jump over to another monitor with some live quotes or live charts. So that was it. Those are the breakouts right there. We came in, and you can see on NQ it's that same trend line, downtrend line, just a 1 minute chart. We bounced, hit it again, back tested, and there's that last minute ramp into the close again. I think somebody wanted to park the Qs green today. Whether or not, doesn't matter. I think they'll probably fade that rally. And like I said, to me, it's 6 to 1, half dozen to the other. Should we go up a little more? Like I said, I had said I'd give it 1% or so to the upside, and if so, I'll add to the. That's just in what I'm talking about here. Even though there was day trades that I had in here today, I'm talking as a swing short position. So whether it's QQQ or SQQQ, whatever you're using, or NQ, that's my plan at least, is to add on some strength, a little more upside. Or should we reverse tonight, tomorrow, and then take out that 80-40 level, and of course pretty much anything under today's lows. So if you don't trade futures, you should, even if you don't trade them, this is Thinkorswim's trading platform here. I don't use it as my active trading platform, but I do like their charts. I have a mosaic of streaming charts. My point is, they'll give you, if you're a customer Ameritrade, you can get the futures charts for free. You don't have to pay the subscription fees and all that. So even if you're not a futures trader, they're there. It's part of the account, I believe. I don't know. Maybe I have those account permissions set. But again, in investing.com will give you futures quotes and charts, or you don't even have to have an account with them. So those are levels to watch. And again, to keep it simple, because that was today's lows in the futures, it's going to be the same lows today in QQQ and SPY. So to make it, again, very simple, any break, I think, a solid break below today's lows should trigger our first, at least near-term tradable sell signal on the indexes, whether you trade SPY or QQQ. Okay, let's run through a few more charts and wrap it up. Here's that late day ramp right there into QQQ. You can see I was showing you NQ, and there was a downtrend line I had on NQ. Same thing. We came close to, but never really undercut. That 80-40 level on NQ. So we need to go a little below today's lows in QQQ to undercut it, and then pretty much just anything below today's lows in SPY as well. You want to see both of those happen. So that was that downtrend line, the back test I talked about. So this will be continued tomorrow. The other things to watch, I mentioned yesterday, the VIX volatility index. Showed you a chart, and examples of how all of the corrections that we've had, pretty much every correction is going to come, the big corrections after the market rallies, comes from the low end of the trading range. Remember, the VIX is bounded. There is no absolute limit to the VIX, but it does trade, as I covered yesterday. It has these floors. The ceilings are not as well defined, but the floors are very well defined, and they change over time. And as I mentioned, since really the beginning of 2018, right here, this is your floor, this support zone. And as I've said, sometimes you come down to that floor and you trade there for a while as the market continues higher. But finally, that's where all the big corrections. That was a big drop down into the the Q4 2018 drop, biggest correction the stock market's had in since the last bear market. And then we had a one and done here. We hit it, and boom, had a correction. And hit it again, boom, had a correction, and then boom, there it is today. Look at that, we finally tagged it. Remember yesterday I said we were close? So now I'm on watch whether it's a one or done. Now you don't, I don't go shorting the stock market just when the VIX hits this level, for the reason I said before. You can hit it and stay there. You did get little pullbacks, I should clarify. You hit it right here where I'm at, and you had a pop. And if you're saying, well, Randy, how do you know? If you didn't catch yesterday's video, what I did is just compare it to the market, throw up a chart of QQQ on there, and here I'll show you real quick. You hit it here, and boom, you corrected. You hit it here, you corrected. You hit it, you had an extreme low there. But again, these were just little pullbacks, and then finally, after this period of persistent low volatility with the VIX trading on that support zone for several months, that's where right here, that was the October high. This was again the biggest drop that we've seen in over a decade in the markets right there, and that was triggered by persistently low readings on the VIX at this level. This time around, then this was the biggest drop in 2019 all year long. It was a one and done situation. The VIX hit this level and the market then corrected. One and done right here. You hit that level, the market corrected. Second biggest drop of the year. And there we are now. I don't know why this line doesn't appear. Oh, okay, we're close. Not exactly there, but close enough that it should be a heads up if you're long, or a heads up if you are a flexible trader like me and you go long or short. Heads up to get ready to get short. And again, the sell signal will be not this tag of this line, but a tag of this line coupled with the breakdown in the equity indexes that I just showed you. Those are your buy triggers. That's where you hone down the entry or sell triggers. Okay, and the other charts to look at, as I said, QQQ traded red almost all day. SPY closed red down a quarter point. Even nothing big, but you had Apple blow the cover off the ball. Facebook nailed it. Fed gave us the quarter point rate cut the market wanted. All that in zero follow through. And I've talked before about my low, if you've caught those videos, where is it somewhere? I have my low volume sell signals on SPY and QQQ that are now in play here. They're not hard timing indicators, but I've covered this before in the past. I have a red line here right there, and you get down to that red line, this extreme low. This is just all I did is put a line here on the average. I use a 10 exponential 10 period exponential moving average or 10-day exponential moving average on my volume. That's the blue line here, and the volume under SPY and all the indexes. And you can see here, when you reach these extreme lows, when you hit that line, that's where all the corrections have come from. So like I said, there's, to me, a lot of evidence that says the next correction is imminent. And just don't forget that right now, let's just treat it as the next 5, 6, 7%, 10% drop. Although the charts are stacked, I won't go into a long-term analysis now, but I've done that a lot lately. My weekly, daily, weekly, all the way out to the monthly charts have divergences, and we're still just above some major trend lines and key moving averages and things there, that we don't have those longer term sell signals. But what happens here is sooner or later, because we're getting so close to those, that one of these quote unquote little corrections, 5, 10%, certainly has the potential to finally take out those key long-term moving averages and trend lines, and then open the door for that 30% plus downside move that I'm looking for when we finally get those sell signals. So who knows? Maybe that comes a month down the road, a year down the road, 2 years down the road, or maybe it comes next week. So the point is, just be ready for it. And how do you trade that? Well, if we get the sell signals tomorrow on your swing trader, you can open swing shorts. If they, maybe if we get additional evidence, the follow-up downside of the following day, you can add to those. And then we'll have to go from there. As I always say, the charts are dynamic, and so is my analysis. So if and when the next correction starts, the next pullback, we'll have to assess the technicals as they go. We'll have to look at volume. We'll have to look at price action. We'll look at things like the indicators, divergences. We'll look at market-leading stocks. I mean, there's so much that goes into it, but let's keep it simple. Right now, we're in an uptrend. No sell signals yet. Very close. We came close today, but we didn't trigger them, so we'll watch out for those tomorrow, maybe next week. We'll see what happens over the in the coming days here. And then finally, we'll wrap it up here. One of the big stocks to watch, of course, is Apple. Again, blew it away. And like I said, Apple, great earnings report. And what was good about that is, iPhone sales were soft. Those were down, but the market cheered Apple because they're selling peripherals, wearables, and things like that. And what it's doing is expanding their revenue stream. So if iPhone sales are soft, they're not so reliant on that anymore, and that's a good thing. But all fundamental, and I'm a purist when it comes to the charts. That's nothing the insiders, Tim Cook and everybody else working at Apple that is able to buy the stocks, nothing they didn't know about. So you have to wonder, and of course little birdies that share those things. So how much of that was priced into this run up so far, especially the run up off the December lows? So all I can tell you is Apple has a history. Not every time, of course, but a lot of the major tops have come right after earnings. In fact, I think this one was earnings, and I'm not mistaken, maybe that one. But in the past, I've seen some earnings reports where Apple blew it away, hit the cover off the ball, and yet the stock went up for maybe a day or two, and then boom, that was it. So we'll watch Apple. You're going to see a funky looking doji. Disregard it. That was just due to an errant trade somewhere in here. You don't see it on the 1 minute chart. Stockcharts.com, Thinkorswim, TC2000, they all had that daily candle like that, but you can see on this 1 minute chart. Here's yesterday's close. This is the trading today. So all I wanted to say is, the chart services are showing you this big doji, but Apple effectively never really traded down here. And if it had one print down there at 237.79 or wherever that low is, it was just a single print. It's not like the market took that stock down and ran it up there. So I just wanted to say this. I'm not reading too much into that doji stick, but I did share Apple as a short trade op on the site. I usually don't share trade ideas in the public videos, but this is part of general market analysis, so this is what you want to watch. I won't give you my price targets right now. That was shared on the site today in the video and in the trading room, but what I can show you is you have a nice clean bearish rising wedge on the 60-minute chart. You broke down just before earnings. We had this gap up today from earnings, and again, it didn't even take Apple to a new high. Now, that's not a big deal. We're not far from it. It could easily punch up to new highs. It could backtest this wedge for another day or two, or even a few days. But I wanted to point that out from technical analysis. Forget about what just happened, earnings, everything else. The fact it's near an all-time high. What I see is a stock with a breakdown from a bearish rising wedge pattern and a back test, and that's an objective short where it was today and where we closed today. And if we're around that level tomorrow, and if we go up a little bit more and continue to back test this trend line, because you have negative divergence here that says that this is likely to play out for downside. Now, why is this relevant to stock market analysis? Well, simply because this is one of the largest stocks in the world, one of the largest publicly traded companies, one of only, I think, two companies that are over $1 trillion in market cap, two publicly traded companies. And it is one of the largest components, heaviest weighted components in both QQQ as well as the S&P 500. So we're going to watch Apple closely. If Apple can shrug off these bearish developments, then the markets may hold up and continue to grind higher for some time. Otherwise, if you see Apple reverse, especially undercut the recent lows right here from before earnings, that would be was that Wednesday's lows right there. I would put a pretty high degree of confidence that Apple's going much lower. So I took a short on it here, and like I told you, I gave the trade parameters on the site today. It's not an official trade. I don't have the highest degree of confidence, but what I like about it, minimal upside. Run about a 2% stop on it, targeting 6-7+ % downside, and you have an attractive risk reward ratio. Trading's all about taking shots and just using an attractive risk reward. You're not going to get them all. You're not going to bat 1,000. Nobody does. But if you keep your losses small and let your winners run, over time that strategy will pay off for you. And again, we're going to watch this one because it has importance on the market. So there's that same trend line wedge on the 60-minute chart, but I'm showing it to you here on the daily. And here's a price channel as well. And Apple, you can see I talk about using the RSI to kind of glean some clues as to when a stock might be getting ahead of itself. Well, you can see Apple has this history of getting to that level right here, that yellow line about 80, almost 81 on the RSI, close to it. And when it gets there, there's usually, as I can show you here, there's a tag right there, correction, and then you put in divergence right there, and then you had the big drop. So you get the point. We didn't even hit it here. So again, we're very close to one of the most overbought conditions Apple has been in for the last couple of years here. And you can see the stock corrected the last couple times it hit that level, and it's came a little shy, but close enough right there. So all right, let's wrap it up here, and we'll just keep an eye on those levels tomorrow for like I said, SPY, QQQ, ES, NQ. Just watch for a break at today's lows. That is most likely going to trigger a sell signal and some more downside if we get that. And then finally, sorry guys, I was going to wrap up. I continue to focus on and trade. I've mentioned this, quite a bit on the site lately. Gold and TLT, Treasury bonds, your two big risk-off assets. And I was highlighting Treasury bond futures, ZB, and gold futures, GC. And for about the last week or so now, some bullish developments, bullish divergence, reversals off support, things like that. And we're continuing to see a strong rally. I just showed you today the markets were flat today. They've been flat for the last couple days. They made a new high and they went petered out. They've gone nowhere. Usually a breakout to new highs on a stock is bullish or the market, and you follow through. So far, no follow through. And we haven't been rejected yet, so I'm not going to say it's bearish, but it's not. It's a sign of non-confirmation that the markets aren't rallying. And even worse, potentially worse, is the fact we're seeing a pretty aggressive bid right now. TLT, Treasury bonds, are the king of risk-off assets. This is where the smart money starts to move when they foresee a drop in the stock market. And as I said in the video earlier today, the Fed came out yesterday. They gave the market what it was expecting, a 25% rate cut. That was baked in the cake. But they also made it pretty clear that they're just part of their mid-cycle adjustment. They're probably done. They don't plan. They made it pretty clear that they don't plan to cut again. Right now, it's not baked in the cake, so the odds aren't there. They said, hey, we'll adjust to market conditions, meaning the stock market takes it on the chin. Between now and, let's say, the December meeting, you're going to get another cut. But they pretty much said, don't count on it. Don't bank on it now. Where am I going with that? Well, Treasury bonds rally on one of two things. They rally on lowered rate expectations. Remember, Treasury bonds rise when interest rates fall. And the other thing is they rally when institutions are buying them, or individuals, as a risk-off asset because they're concerned about drop in the stock market. So I can eliminate any fact that that this is a rise on expectation of lower rates, because the Fed made that pretty clear. They don't plan to cut right now. So therefore, this is telling me this is a flight to safety bid. This and gold rallying in the last couple of days at the same time the stock market's making a new high. Look, it could be a temporary aberration. We'll have to watch this right now. But again, the charts were constructive for a bounce, and so far that's what we're seeing as a pretty strong bid into treasuries and gold. If that continues and the market continues to rise, one or the other is going to break. You're not going to see both happen for a long time. They can happen for some period of time, but again, that's a red flag is all I'm trying to tell you there. So something to keep an eye on. All right, we'll wrap it up here and pick this up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a happy Halloween.